I'm Kunal from Auto Tax Accountants, and in this video I'll be covering how tax brackets work. Please note that the information provided here is general in nature and may not be applicable to your circumstances. Please message or email us at info@dky.com.au for any tax advice from our professional accountants. Income tax is money paid to the government from the money you earn. You usually pay it through the financial year as you earn the income. For example, if you work for an employer, your employer will deduct tax from each pay and send it to the Australian Tax Office on your behalf. You used to get this info in a PAYG summary at the end of the year. However, from 01 July 19, due to STP reporting, you need to access it on MyGov or with your registered tax agent. Now, Australia uses a sliding scale of tax. This means the amount of tax you pay will depend on how much you earn in a given financial year. So your financial year goes from the 1st of July to the 30th of June. The total amount of tax you pay will depend on your taxable income. Now that is your gross earning, which is your salary, minus the deductions on your tax return. Every year, the Australian government presents the federal budget, which includes the income tax rates. The tax rates differ for Australian residents, foreign residents, children, and working holiday visitors. Now, these are the income tax rates for financial year 2019 to 2020, and therefore residents for tax purposes. If you need more info about that, please contact us. So as we can see here, for the first $18,200 you earn, you do not pay any tax on that income. For every dollar you earn between $18,201 and $37,000, you pay 19 cents of tax. For this bracket, you pay 32.5 cents. For this bracket, you pay 37 cents. And for anyone earning over $180,000, it's 45 cents for each dollar you earn over that income. Now, how does that work for you? If your taxable income is $17,000, you will not pay any tax for that financial year. If you earn $20,000, for the first $18,200, you will not pay any tax. For the next $1,800, which is $20,000 minus $18,200, you will pay 19 cents of tax for every dollar. So that's $342. So the total tax you pay is $342. Now there's a common misconception here. If you earn a little bit more, you'll jump into the next tax bracket. But that's not how it works. For example, if you earn $18,201, you'll only pay 19 cents of tax because you won't get taxed in this bracket. Now for an income of $50,000. For the first $18,200, again, there is zero tax. For the next $18,800, which is $37,000 minus $18,200, which is all the money you've earned in this bracket, you're paying 19 cents of tax for every dollar. That equals to $3,572. Now for the next $13,000, which takes you up to $50,000, you pay 32.5 cents, which is $42.25. The total tax being $7,797. As you can see here, the tax on a $37,000 salary would be $3,572. So, for ease of calculation, the tax brackets that you find on ATO's website, you can immediately go to, for example, $50,000. Okay, I'm in this bracket. So they've already calculated that for you, and they've gone, all right, now for every dollar above $37,000, you can calculate it for 32.5 cents. So we could have just gone straight to $50,000. All right, okay, I'm in this bracket, so it's $3,572 plus 32.5 cents for the remainder of the $13,000. For the next example, $100,000. $100,000, we already know from here, we're going to go straight away to this bracket. So that's $20,797 plus, for the remainder of the $10,000, we'll pay 37 cents of tax for every dollar. That's $3,700, which makes your total tax bill $24,497. Note, this is only an income tax, and you may also be liable for other taxes, such as Medicare levy, etc. But that's for another video in the future. Thank you.